This is the Louis Rios with Success Landing. He is the man.
With the Rockstar team.
With the
powered by Success Landing. Remember that.
Rockstar team powered by Success Landing. He's the money. OPM, other people's money. He's other people's money. Is what he is, right? So, so we're here, and really, you know, today we're almost in the middle of December, 2024, heading into 2025. Let's start with how are rates? How are rates?
So rates right now are not bad. I mean, I locked a young lady this morning at 6.5% with about a 0.375, 0.4 discount, which is not bad when she was waiving escrows and putting 20%.
What does that actually mean to someone who heard those numbers and be like, well, what do those numbers mean? Like, what is that?
I mean, the reality is when you're buying a home, you can either get a rate without points, meaning you don't have to pay anything to get the rate.
Okay.
Or you can spend a little money, like in her case, she's spending a little money, about $1,800 on her loan, so that she can get a rate that's going to save her about $60 a month.
Oh, wow.
So over the time period, if you divide it out, her break even is about 3 years. I always look at break evens on when you're paying points. If you're saving enough money that your break even is 3 years or less, then it makes sense.
Okay, what is a point? Just go over for people who don't know what a point is.
So a point is 1% of the loan amount. So let's say that in this case, the loan amount is $372,000. 1% of that would be $3,720.
Okay.
So if the savings doesn't yield enough monthly by paying that point over a 3-year period, or if you decide to stay there longer, 5-year period, then it's not worth paying that point. You just threw that money away.
So 3 years is the metric.
I look at 3 years or less.
Okay, 3 years or less.
2 years or less, home run. 12 months or less, even better.
So 2 years or less is a home run. Good to know. 3 years or less is a good deal.
It's a good deal. And 12 months, it's even better. So, because the way I look at it is, I mean, a client, well, I really want that payment to be $60 less. I said, yeah, but we also need to look at 12 months from now, if rates are 5.5% or 5%, and you go to refinance and you paid that point, you just threw it away.
Yeah, you threw it away. Ah, good point. Not thinking about the future.
So you got to look at both sides of the scenario.
Yeah.
Right? You got to look at both sides of the scenario. So
that's a good balance.
I always look at which way it is for the client. And then there's also alternative type loans out there, like your non-QMs, your DSCRs, and other products that do charge points to get to those loans. The reason why is because most of those loans are private investor loans. They're not being sold to Fannie, Freddie, or Ginnie Mae. And because of that, they give you an option of either paying a couple of points to get the lowest rate available, or paying a higher percentage on the overall loan and not have to pay. Okay. So typically when I'm looking at non-QM or investment or different loans like that, it makes more sense to pay the points to get the better rate. Because number one, you're going to get the write-off, especially if it's an investment type loan or a LLC type loan. You're going to write those fees off anyway. Okay. So it's not like, you know, and a lot of those loans we do are 30-year fixed.
Okay.
So
that makes sense.
I have a client right now buying a house on a bank statement loan. She doesn't qualify normal. If she didn't buy points, she'd be at like 8.25, but if she pays a point, it's 7.25. So her payment difference is huge.
Oh, wow.
So it makes sense. And I don't see her being able to refinance for another 2 or 3 years until she gets her tax situations right.
Gotcha.
So it makes more sense for her to take the lower rate and the lower payment over the next 2 years than it is to pay that higher premium that she was going to pay.
That makes sense. That makes great sense. So the way you manage the points, the way the programs that you have, the way you manage, like it all kind of, you have to sort those numbers out to make sure it makes sense.
Right.
So like, you're not putting yourself in a rabbit hole.
Correct. So like if you're buying a home FHA, let's say today's par rate is 6.5, right? But you could pay a quarter to get 6.25, or you can pay a half to get 6%. The difference in the payment is huge. It makes sense to pay that extra 0.375 or that extra quarter to get that lower rate.
Let me tell you, this is where the advice matters.
Yes, you got to have somebody with experience that's not going to say, because you'll have these call center guys that are calling you, say, oh, I can get you $599 today, FHA, but they're charging you 2.7% discount points, and you're never going to break even out of it. Like the break even is like 120 months, 10 years. Well, are you going to be in the house in 10 years? Yeah. They're just
statistically, they're going to be in 7 to 8.
Exactly. Yeah. So, but they're selling you a rate, and you're like, oh, I got $599, but then they send you the fees over that they're charging you I just saw one 2.7% discount. They were charging this guy on a VA loan, and I'm like, do you see how many points you're getting charged? Oh, but look, but the seller's giving me a credit.
Okay, so then there's more to the loan than just the rate.
No, the rate doesn't count. I mean, the rate's important, but you're dating the rate.
You're dating the rate.
You're marrying the house. the location. Real estate's all about the location, right?
Yeah.
Get the right location, especially right now in this market. There's enough inventory. You can go in there and get the house you want, even if the rate is a little bit higher than what you want. Because think about this. Where were you at 2 years ago when rates were lower? How hard was it to get a house? Weren't you having to bid 10, 20,000 over to get a house?
2 years ago.
Yeah, exactly.
More.
So think about this. Today, you can buy that same house for what they're asking, and you're getting them to pay closing costs and maybe even buying down a rate, but you're not competing. You're not having to pay that $20,000, $30,000 more.
That's right.
So in the long run, when you look at it, you save $20,000, $30,000 buying the house now, the off season. And then when rates do get better, guess what? You have the location.
Yeah.
You married the house.
You're
dating the rate. Now you can refinance the house in 6 months.
You know how I think about it? I don't know. Do you ever remember playing Monopoly?
Yes.
You ever remember the person who always got Park Place?
Oh, yeah.
The first 2 times around Monopoly, you didn't care. But when he starts putting those green houses and then the red, you're praying you don't land
Please
on
don't
that guy. That's what it is to own the house and date the rate, right?
So remember,
that makes sense. I love that.
Location. Always buy the right location, right? And if you're in a situation that's going to be your first house, think about it as future investment.
Let me ask you something. That's a great point. Let me ask you something. On the pre-existing world, in the pre-existing homes in town, not where there's new builds, what are you seeing right now as the seller willing to contribute to help with buying down the rate and or closing costs and things like that? How much are you seeing on average around town?
Right now, on a home that's sitting more than 30 to 60 days, I'm seeing around $10,000.
$10,000. Okay.
Plus title.
Let's assume for a second, let's go.
That's what I'm saying.
Let's assume for a second the buyer would like the lowest rate possible, right? For any of those that want to know what this would look like. So let's just assume that what can a buyer do if they took $10,000 and said, well, let me get the lowest rate? What could that look like?
Let's look at it this way. It all depends how you want to set up, but and if you have the money to pay the rest of your closing costs. But
assuming that, yeah.
Let's say that it's a $400,000 home. So now we have up to 2 points that we can buy down there, right?
2 points, okay.
It says $8,000.
Right.
Well, it could be less because of the loan amount. The loan amount's going to be less after. So let's say $7,000. You can take that $7,000 and invest it in buying down the rate. It's going to get you from 6.5, maybe to 5.99, maybe to a lower rate than that.
Okay.
But be prepared that you're not going to refinance for 3 to 5 years because you don't want to lose that money. Okay. The other thing you can do with that money is you can do a 2-1 buy down, and this way you don't lose the money. And you may need a little bit more than the $10,000 to do the 2-1 buy down, but we can factor it in. What happens is that money is then placed into an escrow account. So let's say that the rate today is 6.5%, and you do a 2-1 buy down. So your first year will be 4.5.
4.5.
Your second year is 5.5, and then your third year goes back to the regular market.
Okay.
But that money that's set aside for the interest difference goes into an escrow account to pay the difference in the rate. So let's say a year from now, or a year and a half from now, rates are at 5.25, and you say, look, I don't want to wait to 6.5 to refinance, but you still have another 6 months of your buy down. You could refinance, and that money's given back to you. You know.
Oh, interesting. Oh, interesting. That's clever.
Yes, that's why a lot of your overthinker engineers will do a 2-1 buy down, a 3-1 buy down before they will do a full rate buy down. Now, if you're like me, I don't want to overthink things. I'd rather just buy down the rate and know it's done.
Right.
And not worry about it. I'm done. I'm done for the next couple of years. Unless the rates get really, really good, then I'll refinance.
Right.
Because when you look at national average over the last 20 years, the average rate is still 6.5%.
Right.
So we're in a normal market right now.
Right.
Okay. The time that we had the 4s and the 3s, I don't think we'll see that again. I think we'll see maybe mid-5s again next year.
Next year. So you're thinking 2025.
2025, and not even at the beginning, probably towards the middle of the year or later on.
Okay.
But then when that happens, what happens? Everybody comes out of the woodworks, and I'm telling you, my phone has been ringing off the hook the last couple of weeks. I have more deals closing in December, which is not normal.
Right.
Than I've had all year.
I'm so curious because I know a lot of people always brought up.
And a lot of people are refinancing right now.
A lot of people brought up the election. Did you see these calls after the election? Is that what? So that kind of was true. You saw that after the election, actually, your phone started ringing more. Interesting. So people are feeling better about 2025. Then.
Exactly. Before I was being proactive with my business, meaning I was reaching out to people, asking them, hey, they want to do business, whatever. And that all of a sudden shifted back to a reactive type of business, which I don't like, but still good.
Right.
Because now I'm having more clients call and more pre-approvals coming in the other direction than they were before.
Okay, so if you have more activity starting now in December, that means next
January's
year
gonna be better.
We're going to see January. We're going to see February.
And if you're a real estate agent, and this is for real estate agents, if you're a real estate agent out there and you're not putting in the work right now, you're going to miss out on a great opportunity.
Mm.
Really. And if you're a client that's looking to buy a home, a first home, or an investment property, the time to buy is now because there's inventory and there's negotiating. Even as an investor, you can get the seller to pay 2% of your closing costs. So you buy a $400,000 home, you're still going to pay $8,000.
So listen, gang, this is Luis Rios with the Rockstar
team
at Success Lending. And he's a wealth of knowledge. He's one of my go-to guys.
Quick story. Back in 2012, I had listed my house with another agent that I knew really well. She had it on the market for 6 months. Didn't really have any activity. I made the mistake because I said, hey, can you give me a discount, whatever the case? And big, huge mistake. Big mistake. I asked for a discount. She didn't do much with the house. I thought she was going to do something with the house. I hired Juan and Bettina. They came to me and said, Louis, give us an opportunity to sell the house. Didn't give me a discount. I gave them full boat. Within 5 days, they had 3 offers on my home because they were out there working it.
That's right.
Okay, 5 days. And within 10 days, we were under contract. 2012, guys, this is not the normal market. We had been on the market for 6 months. Came out for just a day to go on under them. And they made it happen. That's why we work together and we blend together, because these guys know what they're doing when it comes to real estate.
We're here for you guys. If you guys have any questions, we're here to just have a conversation or go further or less further, whatever you guys need. Have a blessed day. Thanks.
Later.
Thanks, buddy. I appreciate you. I do.